Everybody, it is Wes with Pikes Peak Trades, and I'm excited to get back to a video presentation for you. I've been enjoying some holiday and some time away from the markets for a few weeks. My family has transitioned back to the United States from living overseas. There's just been a lot going on, but I'm in the process of getting back into a more regular and routine uh, place of being able to follow the markets, and so wanted to try to get you guys caught up on what I'm seeing right now, and take you through the main indices and ETFs. I'll try to do a good job over the next couple weeks to get caught up on individual names. But for right now, this is going to focus on the Qs, on the S&P 500. We'll do ARKK, we'll do the Dow, we'll do XLF and IWM. We're going to show a variety of time frames. So I want to get to the big picture and talk a little bit about how I view the connection between price waves under Elliott wave theory and some of the technical indicators, because I think we're coming up into a period of some heightened volatility. And so let's just jump right in here to the Qqq monthly chart. And a couple things that I want to point out, the way that I have these waves labeled, and then what I'm kind of looking for as we start to think about wave extensions that could be complete, that could be marking the possibility of approaching significant tops. So here in the Qqq, I have the top of the tech bubble in March of 2000 as a super cycle 1 high, and then almost a decade-long super cycle degree 2 correction, and then the movement from there, essentially a decade's worth of a cycle wave up, and then really kind of a quick cycle degree correction, and then into what's now a cycle 3 of super cycle 3. Now, I left this in non-log scale for a reason, to show you the near parabolic upward movement of where we've seen tech companies go really here over the last 5 years. And so that makes sense that this count should be threes within threes under Elliott wave theory. So I have it in a primary 3 of a cycle 3 of a super cycle 3. And that makes a lot of sense, because we have really seen an astounding growth in technology over the last decade. And I do see that continuing into the next few decades, certainly within the next few years. So where are we within that progression? Well, I think we are actually getting pretty close to a significant, we could call it a major top. In my depiction of the vocabulary, it is a primary degree top that I think we could be approaching. Now, I want to talk a little bit about how you can use the relative strength index to try to judge how that might be taking place. And I want to take you back in time and kind of look through what happened before we were ready to create a cycle degree top. And what you're going to notice is that we had obvious divergence right down here on the RSI 9. I use a 9-period calculation here because I think it provides just a little bit of more quickness in being able to judge divergence. We see obvious divergence on the monthly chart as price continued to make new highs. That indicator did not. Okay, and I want to point out that we are actually not yet seeing that on a cycle level. So although we're not done with the month of July, the reading here at the end of August 2020 is actually less than the reading right now. Okay, now we can't really talk about that number until July is over, but what I'm suggesting is that if we do not see divergence on a monthly time frame, I don't think we can be talking about a top of a cycle degree. And what I've studied in most of the data that's out there, monthly divergences tend to bring in the most significant degree tops. So that is why I feel good that I think any top that we're going to make in tech is going to be more of just a correction of what has happened since March 2020, not of an all-time correction. I see that happening years in the future. Okay, now, what I do look for is for a primary degree correction, which I think we could be approaching here over the next weeks to months, is what's happening on a weekly basis. And here is where we do see that divergence. So that divergence has actually been in place as price has risen all the way through calendar year 2021. And we're marking it against the high that we see here the last week of August 2020. Okay, now you might be wondering, well, why aren't we marking this against these prices? Well, that's because this divergence already played out. We already saw weekly divergence that resulted in a significant sell-off. This is what I would call the COVID crash. So in my estimation, we're not comparing it to these RSI readings right here. We're comparing it to here. So we want to look for divergence within the same degree wave to try to show where that wave might be topping. Okay, so if price continues to move up, but this RSI level right here of just above 82 is not topped, I think the evidence is mounting that we could be looking for a significant primary degree top. And the question is when? Well, really, by what I'm counting under the wave progressions, it could be at any time. So in what I'm seeing under my black main count is we have the potential for a significant top that could occur within any time period between now and the close future. Now, there is an alternate bullish count. If price continues to move steadily higher and this potential divergence is wiped away, in other words, if we get an RSI reading above 82.35, then we're not creating an imminent top and we're moving more steadily in this very, very bullish purple count. Okay, so those are just ways that I use to distinguish price movements here on a bigger term time frame. And I hope that you think that and find this helpful, especially for your long-term money. Okay, so I have a variety of accounts, some long-term, some short-term, and my longer-term ones are obviously the ones that I'm using this bigger picture time frame for decision making. And if you have gains in those accounts, which I'm anticipating that nearly all of you would, I think we are approaching a place where it might be worth thinking about as we get to the end of the summer. Might be a good idea to start taking a little bit of profits. Okay, so I'm not calling for an imminent top today or this week or even next. I'm just saying that by what I'm following, there is the potential that we could see market-wide quite a big sell-off occurring later this fall. Okay, and if we don't, like I just said, we're going to see that these indicators are actually going to be non-confirming. So the potential divergence will just be erased, and that's why I see the possibility of this very, very bullish count. Okay, so with that kind of as a framework, let's maybe drill down into some of the details. So here on the daily, and we're going to see an RSI on the daily level that is very overbought. And so I am suggesting that I think the potential for volatility over the next few months, I think, is increased in probability. And let me also go back here to these longer term timeframes to talk about what really needs to happen to set a divergent top. Is you need more volatility to pull some of these indicators down so the divergent top can take place. I don't think we've seen that yet. So that is why I'm suggesting that I think we're going to see a little bit of volatility in the form of a couple different degree wave fours. And I'll show you that especially here on the Qs. and then also when we get into ARKK, I'll show you that as well, that I think will allow that type of divergence to set. So where I think we're at on the Qs is the possibility that really the one-day sell-off last week could have put in this minuet degree 4. I've got that here in a purple count. I'm also going to leave, though, the possibility that we could actually be seeing a topping pattern play out as a double zigzag, and this would actually potentially here even give you a false high down to another low this week. So I'm leaving that as a possibility that even this week here we see some more volatility before we get a strong move, I think, into earnings season. So I do think it's most likely that we see the market continue to get bid into earnings season. I think it just would be unlikely that we see a sell-off prior to that. I think a sell-off post earnings here actually makes the most sense. Okay, so if we don't see a pullback, then this degree wave 4 is in, and then I see a pretty steady march possible all the way up into, I think here, the upper 360s to upper 370s is the region here on the Qs where I think we could put in a more significant top. And then beyond that, we'd be looking for that selling to get bought into that potential primary degree top that I had talked about occurring, let's say sometime in the fall. Maybe late September, October, maybe even it could stretch out all the way into November. Okay, so that takes you through on the QQQs. Let's now look at the S&P 500. Okay, so in a very similar fashion, take a look at the monthly chart. So there is no monthly divergence on this chart. And again, let me point out to you, we are not, in my use of the indicator, allowed to compare to this RSI high in early January 2018 because that already played out into a cycle degree correction. And take note, this was actually a double divergence into the top in January and February of 2020. So in my estimation, even without COVID as the spark, the markets were ready for a big pullback because on that monthly time frame, within this same degree wave, we were putting in here a false high. It was ready to pull back. Now, since then, we have yet to see monthly closing divergence. So my suggestion is that I do not think we are approaching the top. I don't think this is of a cycle degree. I have this in even a different degree, a more bullish degree. I have it in an intermediate degree with a primary degree top yet to come, let's say sometime in 2022. Okay, now, like the Qs, everything that needs to happen from a wave perspective is in place for this degree 3 top to be in. So again, it could be imminent. It could happen this week. It could happen next week. But also, we know that wave 3s can extend. So it is absolutely possible that this wave just keeps extending. And in fact, it could extend in a surprising bullish fashion, potentially all the way up into the 45s to 4600s before we actually see a pullback. Okay? I'm actually thinking that we're probably not going to get there. And if you look at this trend line that I'm following, we've had 1, 2, 3 pretty significant touches here. I think if the S&P 500 works itself up into the mid 4400s, touches that trend line, I think we could have a reaction. And you're going to see there's kind of a confluence of fib levels there in the mid 4400s. Okay, so now to the weekly chart. And on the weekly chart, we're looking for divergence. Is there potential divergence? And the answer is yes. So we do see the possibility that a weekly chart could be ushering in a potential pullback of an intermediate degree here. And I want to point out lots of confluence in the 4400s. So this fifth wave of intermediate 3 has a 0.5 fib against what I'm charting as wave 1 at 44.27. Okay, if I drill down a little bit more into the daily, we also have a potential bullish count that has a 1.62 extension at about 44.88. Now, there's another count that I want to turn your attention to, and it's the possibility that the S&P 500 would have been tracing out a fifth and final wave into a primary degree top. So this is about as bearish as I'm willing to get, is that we could eventually see, like in Qs, a retracement of the entire move since March 2020. And if that occurs over the next few weeks, by the way that I have it counted, there is a limit, because wave 3 here in red cannot be the shortest wave. Wave 1 is longer. Wave 3 cannot be shorter than wave 5. That means 44.67 is the limit under this red count. Okay, so we kind of use this really as a way of distilling out possibility. We're not talking certainty. We're talking about possibility, probability. If the market exceeds 44.67, the way I have this red count labeled is incorrect. And so then that would suggest that we would not be seeing a primary degree 2 pullback. It would be something less bearish. Okay, which is one reason why I have the possibility that this black count main wave 3 just could continue up until we see that pullback in late summer. Okay, so then after that, the count would suggest one more, potentially a blow-off type top into that correction that ultimately would correct the entire wave from March 2020. Okay, so getting down into some of the detail, and I had tweeted this out last week in between kind of my vacation activities, the anticipation that this last fifth wave of this intermediate 3, I'm seeing as an ending diagonal. So I'm seeing 3 wave moves all the way up in this move. So this as an A, B, C right now charts really well. So we had a pullback that could be a typical B wave, not really deep enough to be a more typical degree 2 wave, which I have seen that out there on very, very bullish charts. That's why I'm kind of sticking with the next 5 wave move off of last week's low, I think could result here in quite a significant top. And I've been targeting the post-earnings period as potentially a likely time for that to occur. Okay, and I just realized here that I need to make a calculation adjustment. I'm going to give that a calculation here in the mid 4400s. So let me just get that updated. We'll just do that as an estimation. And so then that would put this wave 4 possibly in the 4000s. Okay, so the low to mid 4000s, maybe even targeting this gap fill right within this very, very bullish wave 3 of 3, which I think is the perfect place for a significant gap like that to result in a lot of market upside following. Okay, so we've got a lot to watch. And I do want to suggest that we are reaching that period of market extension where I think prudence suggests that if you are actively trading from the long side, be nimble, okay? Take profits when you have them because from here, pullbacks could be swift and they could actually be ones where we've been trained to buy that 1 or 2 day dip. But what happens when the market has turned its momentum? And so my suggestion is I don't think it's the time to be overly aggressive here to the long side. Okay, so that takes you through S&P 500. In the very short-term count, if we're going to be reaching here a level in the 4400s as a potential top, I think we could be looking at a 1, 2, 3. This 3 could extend, maybe a 4 pullback. If I see that kind of support hold on a short-term trade, I'll probably take the opportunity to try to catch one more last leg up into the mid 4400s. Okay, let's keep plowing ahead. So we get into ARKK. Now, in our ARKK, we have kind of our growth darling names. So we're talking about Tesla and TDOC and Roku and Square and Shopify. And I want to alert the possibility that we don't actually make a new all-time high. So it is actually possible that the high that was created in February of this year is actually a super cycle top, and that we've just put in the first leg down. We're now in the B wave bounce. You'll see the details of the count. It's a little bit different than a B wave in a bit, and we actually have another tumble yet ready to come. Okay, now that's possible. It's not my primary count, but I just want to point out that it's possible. What I also want to point out to you is if on a closing basis we get a high above the close at the end of February, it actually really should be at the end of January, a closing high above 137.44 on divergence, that monthly divergence will likely put in that super cycle high. Okay, so I am forecasting here that I think, let's say over the next 12 to 18 months, there still will be some significant pain in growth, in small caps and in the growth darlings. And so, again, my suggestion is be nimble when you've got the profits for you to take them. Now, as we kind of drill down, I want to point out there's some things that ARKK has not yet conquered. It has not yet beat a bearish 0.618 fib retracement of the entire selling leg from February to May. And for the Elliott wave count, it looks to me like it could become a double zigzag. So we have a three-way move down and a three-wave move up, which would be waiting for another three-wave move down. Okay, so if we see an inability to crack this fib, so in other words, if it can't get above and hold above on a weekly basis 136, I think the probability that although the Qs and the S&P could continue making new all-time highs, that we don't see it in ARKK. And then the implication most likely would be we also don't see it in some of the other ETFs that are yet to come as we kind of work from strong into weak. Okay, so let's look at how that would count on the daily. And I think here I can give you some levels that you could really check against. So under the potential of this bearish count, if that 0.618 fib can't be broken, most likely we're in a very bearish count. Okay, so let me just back up and just state that when major tops are created, one confirming set of evidence is when other indices and ETFs do not confirm the new all-time highs. So we're seeing that in the S&P 500 and the Qs. We're not seeing it in ARKK, in IWM, in the Dow, and in XLF. And that type of fracturing in the market could actually be some evidence that if the S&P and the Qs make a top, there could be some nasty selling legs coming up. Okay, now again, that's not my primary count. I'm still giving to you as my main count that we will see the confluence of all-time highs across market sectors before a pullback. But we just need to be aware that there are very bearish counts out there in the short term for ARKK, and you'll see it here in a bit in IWM. Okay, so into the short term, let me just point out to you that the move from the low in May does look like 7 waves. 1, 2, 3, 4, 5, 6, 7. And a 7-wave move is not impulsive. Okay? So that's why it's possible that this could just be an X wave. What I also want to point out is my bullish count is not violated because the low that occurred on July 8th did not trade into the high that occurred on June 14th by just a few cents. So this bullish black count is still valid. And what obviously has to happen? Well, you have to beat this wave 3 high, get above this bearish fib, and then continue to trace out an impulsive wave. So that would give you a wave 8 down, 9, 10, 11, 12, and then 13. So when you have 4 more waves than 5, 9, 13, etc., that's when you know that you have a bullish extension. And that is yet to be shown in ARKK. All right, so into the short term, if the bearish count is correct, I think we'll see a massive tumble. All right, so I am not in a hurry at all to get in a buying position on ARKK. If we see a pullback, I would have it under the main black count as a minute degree 2. If the low from last week holds, then I would look at that higher low as a really nice buying opportunity. Okay, so you could enter it against that low as your stop with very, very understandable risk reward. Okay, at the same time, I also would say for the bears that this is actually a pretty good setup. So bears have this high from July 12th as their stop for the chance to catch a wave 3 down. Okay, so when the markets get to a place like this, and I'm seeing the possibility of some divergent counts, this is not the time that I look to go heavy in position sizing. And I've already recommended you got to be quick, be nimble, because I think we are approaching that possibility of significant tops taking place. Okay, let's keep working through. There's 3 more. So let's get here into IWM. Okay, so here into small caps. And what I think we're seeing in IWM in a similar way to the S&P, but I think further ahead in its degrees, is we're looking for its first primary one top off of a significant cycle low that occurred here in March of 2020. Okay, again, from a divergence perspective, on the monthly chart, the divergence that you see from here to here already resulted in a cycle degree correction. So we are not comparing the RSI reading over the last 2 months with what occurred in 2018. That's already been reset. So from a monthly perspective, again, I don't think we're looking at a cycle degree top. Now, from a weekly perspective, the story is different. That divergence is very, very noticeable. So that is giving the possibility that any new all-time high on IWM could potentially be setting up quite a significant primary degree correction. Okay, and until that happens, like what I just showed you in ARKK, we have to leave the possibility that top is in, and this is a very bearish 1-2 with a 3-wave down developing. Okay, so on the daily, digging into the details, if this is correct and the bears are going to take control, this has to happen pretty quickly. Just like ARKK, this bearish 0.618 retracement has yet to be broken to the upside. So again, to the upside, that's kind of your trigger. We get that confirmation, and you can start feeling a little bit more confident about buying from the long side. But if you're a bear, and that's the way that your bias is leaning, you've got some really good risk-reward levels to trade against. That fib, and of course also the highs from early July. which is right in the 232 to 233 area. Okay, so again, when the counts diverge, a big wave 3 up versus a big wave 3 down, I am not looking to position aggressively. Okay, in fact, I think being in kind of a wait and see mode here is actually, I think, from a probability standpoint, the most prudent. Getting into the short-term time frames, and you can see that if this is the bearish, we have a 1-2, 1-2, 1-2, and that 3 would be a big tumble. Otherwise, I would be looking for this 0.618 fib to break to the upside, and I would be looking to buy the higher low. Okay, just like I suggested to you in ARKK, which then of course means the individual names within those ETFs that you love and like to trade, you can feel a little bit more confident that you're going to have the ETF with a little bit of wind in your sails, so that trade could run a bit. Okay, let's look at the Dow and then finally financials. So we look at the monthly on the Dow. It still looks to be in really good shape. There is no obvious monthly divergence. So again, I'm not looking for a significant top. In fact, I would say here that I would probably just delete the chance that this is of a cycle degree. What I think is more likely is that it's setting up a smaller degree top. We're seeing that potential on the weekly time frame. And the Dow is very, very close here to making a new all-time high. In fact, it only needs about 75 more points in order for it to do that. I think it will do that. If it doesn't, of course, there is the top is in count, which I think here would be a double zigzag. And that would then correspond to the bearish count that you've seen in IWM and ARKK. But I think it is more likely that the Dow does keep marching up into a period of volatility where we see a set of wave 4s and then working into a topping area later in the fall. Okay, so on the Dow, I would have last week's selling as a nice 3-wave ABC down into a wave 2, and we're now working into this wave 3. As long as this low holds, in any pullback that results in a higher low can be bought. And until that low of last week breaks, we probably have the confidence that we're going to be seeing new all-time highs very, very soon on the Dow. Okay, last one is XLF. And I really like charting XLF because, like IWM, it counts really cleanly. And I have it in a very, very similar count to IWM. I have financials just having finished in the month of June an intermediate degree 4, working on one more push up into an all-time high. So any price movement that goes above 38.60 would satisfy the completion of that wave. And then like IWM, I would be looking for the next selling leg to be a correction of everything that's happened since March 2020. Okay, so looking at it and understanding it from that perspective, you should be clued in to which ETFs I think we would see the most selling in. I think it would be in ARKK, in IWM, and in XLF. I think the chances that we see less selling in the Qs, the S&P, and the Dow are actually possibilities based on my wave counts. So again, no noticeable divergence on the monthly, which is indicating to me that I don't think we have yet set the top. But on the weekly, we're seeing it. So yes, the possibility is there that top is in, but my primary count says one more push up into the fall. And then getting into the daily detail, I think last week's higher low was a wave 2. So those that like to play the financials could have gotten a really good entry. And then, of course, we're going to see right now, it's kind of being held back by here the 50-day moving average. That's what it's bumped up against today. If we see that then break and close to the upside and start seeing the moving average cluster cross bullishly, then you've got the confluence of evidence that we should be anticipating possibly XLF up into the 40s before that high is set. Okay, so I hope you appreciated that overview of the main indices and ETFs that I follow. Again, let me just reiterate to you, the rubber band, I think, has been stretched enough to the point where the possibility of major topping is getting close. I'm still suggesting that my wave counts look for a confluence of all of these reaching a top, new all-time highs at some point before that happens. But of course, if we do see quite rapid failure, and I think it would need to be this week, failure this week would then cause the probability for these more bearish counts in red and blue to take a little bit more precedence in my counting. So as always, thank you for the likes and follows. Really excited and happy to be back a little more active for you again. And I'm kind of hoping throughout the rest of 2021 to kind of gradually increase more of my activity and continuing to give you some great updates. So best of luck to you this week in your trading and in your longer term investing. And excited to see what the next few months is going to bring us.